based on current situation, even though interest rate is going down,
Right.
I don't foresee the price of property coming down.
Alright, so welcome back to our next episode of our So Far So Good, and we're back in our PropertyLimBrothers studio, and this is the PropertyLimBrothers podcast show, and today we are very honored to have Kenneth Toh from KeyQuest Mortgage with us, and today's session is all going to be about mortgage loans, and it's going to be extremely useful to you if you're looking to buy your first property or even sell your property and switch to another property, and you're thinking about what are some of the very important things to know about the mortgage loan today in the current market in Singapore. And we're going to talk about some very technical details, and at the same time very, very useful information that you will need to know when you're going to take your loan and your mortgage for your next property. So welcome, Kenneth, to PropertyLimBrothers studio, and we're very honored to have you today. So yeah, why don't you probably give a bit of introduction about what you do?
Okay, thanks Melvin for inviting me to today's session. So basically I'm a mortgage broker, which we have more than 10 years of experience in doing mortgage. So basically from day to day, what I do is to provide solutions to customer and advise what kind of interest rate they should be going for and what are the pitfalls they should be looking out for different kind of interest rate package. And also based on recently all this COVID-19 as well as Sibor on the downward trend, a lot of people is actually going through a refinancing because everyone can see the interest rate is going down and down on Sibor. So I think now is actually a great time in terms to refinance or even get a property, because your interest rate is going to be as low as maybe 1.5% currently based on current market. So it's very, I would say based on the last 3-4 years now is the all-time low, I would say.
Right. So, Kenneth, I think what we want to cover today is I have prepped like a couple of questions that I think will be very useful for everybody to know about. And later part we also ask you a little bit about your business, and because usually our guests on our show, we would like to ask them on their entrepreneurship journey, and how you have started your company in the past, and then how long you have been in the business and stuff like that. But maybe what we want to cover first is that we want to know what are some of the mortgage package available today in the current market, and usually, let's say if I'm a first time buyer, what choices do I have?
So as first time buyer, we actually categorize them under two areas. One would be if they are buying a building under construction, or from resale market, which is a completed property. So because these two segments of customer might have different requirements, and some are maybe for own stay, some are for investment. So maybe I can touch on the building and the construction part. So for building and the construction part, the interest rate wise, the one thing the client need to know is that for building and construction, the banks do not offer fixed. So sometimes in the market, consumer is confused because there's fixed deposit rate, there's bank board rate, there's Sibor, all different jargon from the banks, and they are very confused. What are all these packages? So usually we will actually sit down with the client, explain to what are the different package and how it works, how does it change according to market, and at times also for building and construction, a lot of clients focus on low interest rate. But you need to understand whether your projects actually TOP within the next 1 year, 2 year, or 3 or 4 years. Because some clients, they tend to be attracted by the lower interest rate for first 2 years. But they mislook that on third and fourth year is actually more important. Because as for building construction projects, it's progressive drawdown. So therefore, on the first 2 years, the amount of installment drawing down released by the banks to the developer is actually quite minimum. It's like piling 10%, then 5%, depending how fast the developer build. So there's a group of customers always focus on first 2 years. Oh, I need to get the interest rate which is the lowest on the first 2 years. Example, maybe based on market now, maybe first 2 years you're looking at maybe 1.9 or 1.8 for first 2 years. But on the third year, it kind of shoots up. which you cost you maybe 1.95 or even up to 2%. So sometimes for clients, we will try to understand which project they are buying first, because different projects TOP at different phase. Some they might be collecting keys within the next 12 months. Some they just purchase, so the TOP date is 3 or 4 years. So for clients who are getting projects which is going TOP in 3 or 4 years, we will actually focus more on the third or fourth year interest rate rather than first 2 years, because the amount you are going to pay on the interest rate is very low and negligible amount. Okay, so this is for clients who are looking on building under construction.
Which are the new launches.
Yes, the new launch.
So what you're saying is that for new launches, usually you look at when likely will this project TOP.
That's right.
And then you focus on packages that so-called advantages, in the sense that when they TOP, what is going to be the likely interest rate. That's right. So maybe just for the benefit of our audience is that for BUC projects, usually when you take just like you mentioned, there's no fixed package, right? So when you take a floating package, is there a lock-in period?
For building and construction, usually all the banks do not have lock-in period. Okay, and the clients can actually do partial repayment as and when they like. So most banks allow you to make partial repayment by giving 1 month notice. Okay, so the only clause you need to take note is that if it's for investment purpose or even for own use, usually we will actually get an additional condition, say that free conversion 1 to 2 times. So in the duration of 4 years, the client has the option to change the interest rate package, even they have committed, example, maybe for Sibor package. They can choose to change to bank spot rate or fixed deposit rate if the banks have such package available, and if the rates is lower.
Okay. And so, sorry, just to interrupt a bit. So, do enlighten. Just like you mentioned about free conversion, right?
Yes.
This is with the same bank.
Yes, that's right.
Okay, that means when it TOPs, you can actually convert to another package in the same bank.
Correct.
Right. So, are you allowed to refinance and change bank as well?
Okay, so that's where I'm coming to as well. So another very important thing you need to take note is that all the banks has this cancellation fee. So example, today if you have collected your keys and the existing bank you are with is not giving you a very competitive interest rate, and you would like to refinance to another bank. So at the point of collecting keys, the bank actually has not released all the loans. Let's say if you are getting a 75% loan, probably the banks are only releasing up to 60%. Reason being because from TOP to CSC is 1 year. So this is actually the defect period. So most clients will have a 15% progressive payout during this 1 year. Okay, so at the point of time, if you do a refinancing at TOP, the banks will usually have a penalty of 0.5% on the undisbursed loan amount. So this is one of the costs.
Even though there's no lock-in period.
Yes, that's right.
And this is only specifically for BUC kind of packages, building under construction. So are these like some of the things that usually a lot of consumers, they are not aware of when they sign on the letter of offer with the banks? Like, are these like some of the blind spots that we are talking about?
Yes, because usually most clients are only focusing on the interest rate. So they want to get the minimum interest rate. So these are the blind spot that they might have not looked into, whereby does this cancellation fee, are they aware if they refinance, there's this cost involved, and how much are you looking at? So another important clause is actually what we usually get for the client is sales of waiver. So nowadays we actually have this clause that, okay, in the event the client sell the property within the next 2, 3 or 4th year.
Okay. Are you talking about sub-sale or?
Sub-sale. So that means
before CSC.
Before CSC.
Or maybe even before TOP.
Even before TOP. Let's say they have met their SSD period, so they want to sell off the property. So there is this sales of waiver clause, which the banks actually nowadays we are able to get it for client, that they will waive off the cancellation fee if it's due to sale. So this would be very useful for clients who are buying properties for investment, and they want to liquidate off the property during TOP or even after TOP stage, that they don't need to pay this cancellation fee clause.
This cancellation fee applies mainly to refinancing if you switch to another bank, but in the event if you were to sell the property, actually nowadays it's quite popular to have this sales of waiver clause.
That's right.
Okay. Wait, sorry, pause a while. This one can reduce the volume a bit. It's quite boss effect. Yes. Kenneth, 你会太大声吗？
So far, okay.
Okay, okay,
Yeah.
okay. All right, let's continue. Okay, so I think what you have just shared with us is like very useful information, especially for consumers that are buying new developments, new project, new launches, and BUC. So we talk about the sales of waiver clause. We also talk about the fact that if you were to refinance when the TOP and you felt that the interest rate is not beneficial when it hits its third, fourth, or fifth year, some people might want to say, hey, I want to change bank and I want to change to a more preferential interest rate. But at the same time, they will be hit with the cancellation fee of 0.5% on the outstanding undisbursed amount, which is 15%. Right? So, which means that if it's like $1 million property, 15% is about 150,000. 0.5 would then be about probably $700.
Yeah.
Okay.
Yeah, about. So the cancellation fee depends from bank to bank as well.
Right.
Some bank is 0.75%, some bank is at 1.5%.
Okay, sure. So this is then very important when they first bought the property.
Correct.
To select a package that will actually last them until after TOP.
That's right.
Okay, so and that's where you come in to help your consumers to select the packages that will then save them this trouble from changing banks upon TOP.
Correct.
That will last them. Okay, great. So usually how do you do your comparison? Like example, let's say if I'm a buyer, I just bought a new launch and then I come to you and say, hey, KeyQuest Mortgage, can you help me to do a selection? So usually how many banks do you actually compare?
We actually compare across 16 banks.
16 banks, all right.
Yes.
Are there only 16 banks in Singapore?
Banks, if we including FI, we are going about 18 to 20.
Okay, that means including like financial institutions.
That's right.
Which is like, what are some of the financial institutions in Singapore?
Hong Leong Finance,
Right.
Singapura Finance,
Right.
Sing Investment. These are all the FI available in Singapore.
Okay.
Who does mortgage as well.
So it's about 16 to 18.
Yeah.
Okay, great. So how long usually does this comparison take? Let's say if I come to you today's a Monday, usually how long do you need to get back to me? How long does your team need?
Okay, in terms of comparing interest rate, because we have rates update daily, so usually what we will do with what we will share with clients is that based on the current sentimental, we actually shortlist 2 or maybe up to max of 3 banks for them. Reason being because if the rest of banks interest rate are higher, so there's no point of looking at them.
Right.
Yeah, so we usually cater maybe 2 to 3 banks for the client to select and tell them what are the difference between the different banks' interest rate and what are their conditions or clauses they have, like the sales of waiver, all this. Are they including this? And is there any special things we need to take note on these packages?
Right. So you usually select the most competitive one.
Yes.
And how often does bank change their rates? Is it on a monthly basis or is it like per every 2 weeks or per week, and or is it like seasonal? Like
Okay, it used to be maybe every month.
right.
But for the last 1-2 months, what we see is that banks can be changing interest rate every week or every few days.
Okay.
Because of this Sibor rates coming down. So the banks are reacting to it. Some banks are on the reducing on the fixed rate as well as Sibor. But some banks are actually adjusting upwards because the Sibor is dropping and they are increasing the spread so that the banks make still a margin of interest which they want to do it.
Right.
Yeah.
So enlighten us about Sibor. All right. So because there's Sibor rates, there's SOR rates, there's now banks bought rate as well.
Yes.
Some banks offer their own fixed deposit rate.
Yes.
Right. So maybe enlighten us like what is the Sibor rate? How is it pegged to? And usually because I think a lot of our consumers, when they look at newspapers, articles and stuff like that, especially when US reduce their interest rate, right? So when Feds reduce their interest rate, then we see some adjustments in our local rates as well. Why is that so? Like why are we impacted by the US Fed rates and stuff like that?
Okay, I would say because a lot of our industry in Singapore, we actually work with US closely and we are using US dollar. So every time when we see that when US announce that they are cutting interest rate, the Sibor actually has some changes and fluctuation. Based on what we see on the past trend, is always on the downward every time they announce that they are cutting their interest rate. So, and Sibor is more like an interbank lending rate. So bank to bank actually do borrows money. Right. So that's a certain spread and it's very transparent. It's on newspaper every day. that we can see how much is SIBOR.
Right.
So SIBOR, we have 1 month SIBOR, we have 3 months SIBOR, we have 6 months, we have 12 months. But most of the banks are using 3 months SIBOR as a benchmark. Certain banks do offer up to 1 month. So the difference between the different months is just that if you're on 1 month SIBOR, meaning to say that your interest rate might technically change every month.
Okay.
Depending on how much is SIBOR. But whereas a 3 or 6 months, it will change according to every 3 or 6 months on the SIBOR rates.
Okay, great. So coming to this SIBOR rates, right? So in your perspective, today, if let's say somebody is going to purchase a resale property or maybe even a new launch property, what will be your advice? Like, should they specifically go for like SIBOR or SOR, or should they go for the bank's rates that's pegged to their fixed D or pegged to their board rate? What will be your advice? Like, and then how do we actually decipher all this? I mean, there's so many rates, so many different ways that the banks peg based on different mechanisms. How can somebody that's buying their first property decipher all this?
Okay.
Right.
I would say in the current market, SIBOR would be probably one of the most favorable at this point of time.
Okay.
Because we can see it's on a downward trend.
Right.
And it's transparent in the sense that it's always available in the market, that consumer can just Google it online and see what's the rate of SIBOR.
Right.
So you have a transparency. Whereas for fixed deposit rate, bank spot rate is actually determined by the bank itself. So for most of banks who are using fixed deposit rate, like say 8 months or 9 months fixed deposit rate, is actually pegged to the bank's deposit rate they are giving out in the retail market. That means today, if you walk into a bank and say, look, I want to place a fixed deposit for 8 months, how much are you offering?
Right.
Yeah, so that is how the banks derive the fixed deposit rate.
Right. So fixed D rate and board rate are determined by the banks.
Yes.
SIBOR is like international.
Yes.
And I can just Google what's the latest SIBOR rate, because
That's right.
usually when I think a mortgage of a SIBOR, it will be like SIBOR plus how much.
Yes,
right.
that's
So
right.
is that the same for SOR rates as well?
Okay, now most of banks actually have already absolute SOR.
Right.
So most of banks nowadays only offer SIBOR, fixed, bank spot rate, and fixed deposit rate.
Right.
Yeah.
Right. So so in your perspective, because now interest rates are likely in the foreseeable midterm or maybe in the short term, you think that probably it will go down a little bit. So
Yes.
you think that actually going for a SIBOR pack rate will be actually more favorable.
Yes.
Right.
So what we see is that within the next 6 months, what I think will be the rates will be on the downward trend, because with this COVID-19 going on, a lot of business will be impacted. Then more and more business will see the impact later on, probably not now, but in 3 to 6 months. So we
Right.
foresee that this SIBOR will be on the downward trend within the next 6 months.
I see.
And to be frank, over the last 10 years, when we look at SIBOR, this period is on, I would say the depreciation on the rates is very fast.
Right.
SIBOR is actually going down like maybe 0.1% every few days or every week.
Right.
So which we see based on the last few years, it has never gone down that fast. Okay, before this, let's say we in 2010 to 2012, when we see the SIBOR upward trend, right, it was gradually going up by like 0.01%. So
Right.
that's 1 basis point. So, and it has not been increasing that fast. The fastest I saw before was like every month it increased by 10 basis points, with 0.1 over the 6 months period. But now what we are seeing is on the downward trend, on dropping, is that every week we are reducing 10 basis points, which is a lot.
Right.
Yeah.
Right.
Yeah.
So in your perspective, because the SIBOR is going down, which means that the cost of borrowing for having a mortgage loan would then go down as well.
Yes.
Right. So what is your perspective like, based on your experience in the mortgage industry for the past years, right? What is your perspective of the interest rate fluctuation vis-a-vis the property price in Singapore? Like, do you think that the interest rate is the only determinant, or actually there are so many different broad factors that that affect property prices and stuff like that. Because I mean, for us, we actually did an episode. If you have watched our Invest and Ask series, we talk about why Singapore is different now.
Okay.
And the fact that right now, in terms of our property price index, there's like 7 or 8 rounds of cooling measures priced into it, and we're actually on a very stable market. Most of the buyers in the market now are upgrading from the HDBs, or they're buying first time into the private property market.
Okay.
And in terms of the local demand for private property, it is very strong still.
That's right.
Yeah, and I think also for the fact that in Singapore it's an aspiration to own a private property, right? So, I mean, we are on a very different kind of trajectory. Yeah, so there's also a very interesting report in 2018 by Morgan Stanley where it was found that out of 4 times of the 5 times, or maybe 3 out of 4 times when the interest rate increased in Singapore, the property price actually went up.
That's right.
There's only one time when the interest rate increased and the price came down, and I think that was I'm not sure what event was that, but most of the time, which is about 75%, when interest rate go up, actually the price in Singapore went up for the property market. So, what is your perspective? Like, you know, what have you seen so far?
Okay, so based on current situation, even though interest rate is going down,
Right.
I don't foresee the price of property coming down.
Right.
Reason being for a few reasons, because the developer actually purchased the land for X amount of dollars, and they have building costs, all this. So I foresee within the next 6 months, the prices from new launches will not be coming down, because they have a certain so-called break-even point the developer has to sell. So I only foresee that for new launch is on the upward trend. Even for resale,
A very gradual, stable trend.
yes. And for resale market, what we see currently is more stable, and I think that prices for resale will remain as what it is, because today, for a very simple fact reason, that if you can't get the price you want, you probably will hold on to the property.
Right, because the interest rates are low anyway.
Yes,
right.
You won't feel the pinch now, because it's not like 1 or 2 years ago whereby some of the rates is as high for fixed rates over 2%.
Right.
So like some of my clients who've gotten fixed rate in 2018, they are looking at about 2% plus region.
Right. So are you saying that actually the interesting fact is that when interest rate reduces, a lot of existing property owners actually refinance their loans
That's right.
to the latest low interest rate, and that means that their cost of holding the property is actually lower. And I mean, in Singapore, the whole ownership rate is so high. Most of them hold private properties because they are staying there, their kids are studying around there and stuff like that. So are you seeing an increased trend in refinancing, especially over the past few months?
Yes. Specifically these 2 weeks, we can see the number of inquiries on refinancing has increased
Quite a fair bit.
More than 20 to 30% from what we see in the last 2 months.
Right.
And one of the main reasons is because Sibor is coming down on the downward trend. And most clients more inclined with Sibor now, because I would say maybe all in lowest now, based on 3 months Sibor with a spread of 0.15, is about 1.5.
So that means, what is the best package now today? I mean, now we're in March 2020.
Yeah.
So what is the best package today?
As of today, I would say based on Sibor rate is 0.15% plus 3 months Sibor for 2 years. So we are looking at first 2 years at 1.5%.
Which bank is that?
This is actually from Standard Chartered Bank.
And this is for completed properties or BUC?
It's actually for both, but there is a minimum loan amount you need to achieve. I would say like minimum 1 million to secure this rate. But the rates actually change quite fast. So today we can say that Standard Chartered is the lowest.
But maybe next week some banks will overtake them and stuff like that. Right.
But what we see differently is from the last few days that the banks are actually increasing the spread. So most of the foreign banks have actually increased the Sibor interest rate. Instead of, it used to be maybe 0.15, 0.2, they have increased to 0.3 to 0.4 spread plus Sibor. So that will add up to about, let's say 0.3, it will give us about 1.8%. Right.
It's just that at this current juncture, Standard Chartered is the lowest at about 1.5. Right, that's very interesting. Okay, so we have also a lot of audience and our clients asking us about mortgage insurance,
Okay.
right? So just want to talk a little bit about mortgage insurance first. Okay, so usually how would you advise somebody that have just taken a loan, right? How would you advise them on mortgage insurance? Like, what are some of the key things that they need to look out for when choosing a package? What are some popular options usually that people would take in terms of mortgage insurance? Should they cover one person or should they cover two person and stuff like that?
So usually for mortgage insurance is very recommended to purchase at current market because most of the properties we are looking at, the loan liability is about 1 mil plus. Right. So let's say if you have something to assure you that to cover, the trend is usually the husband will actually purchase for the wife will purchase for the husband to insure each other.
Right.
So in case of any event of death, the mortgage insurer actually pay out a lump sum to cover the mortgage loan.
Right.
Yes.
Right. And I mean, it's getting increasingly popular that last time a lot of people take the direct kind of mortgage insurance, but
That's
nowadays some consumers actually prefer to take a term insurance.
That's right.
To cover the loan amount, which is actually work out to, I mean, for mortgage insurance it will be a decreasing kind of concept, but term insurance will be probably
a straight line,
or maybe you can review it yearly and stuff like that. So
yes.
What is the key difference and which one do you recommend personally?
Okay,
right.
So I would say the key difference is that if you're buying an insurance today, if it's on a depreciation term, it's definitely cheaper in terms of price.
Right.
But if you have to look at the asset value, because today, example, if you're in your 20s, 30s, when you get a mortgage insurance, it's going to be cheap.
Right.
10 years down the road, let's say if you're selling off the property and you are buying another property,
right.
you probably need to repurchase a mortgage insurance. By then,
it'll be more expensive because of the age, your health and stuff like
correct.
that. Right.
So at most times, we actually advise clients to look into a term insurance as well. One of the key differences is that term insurance is actually a straight line. So let's say at age 30 years old, you cover 1 million.
Right.
At 50 years old, it still covers you at 1 million. So there's no depreciation value on the term.
Right.
And another main difference is most of the mortgage insurance does not cover permanent disability.
Okay.
Whereby term insurance actually covers that, which
is beneficial as well.
Yes,
there's additional coverage.
Yes, correct.
Right. So what I think Kenneth is saying is that for mortgage insurance is pegged to the property.
Yes.
Right. So for example, let's say you buy a property A today and then you stay for 10 years.
Yeah.
And 10 years later you sell off that property and you buy property B, you have to retake the mortgage insurance and
right.
all the health declaration and everything will all kickstart.
Yes.
But compared to a term insurance you buy today, it can just last you all the way until maybe age 65 or something like that.
Yes.
And in between, if you switch 2-3 properties, you don't have to redo it again.
Correct.
Right. Okay. So personally, I mean, we're not going to quote you, but personally, for your own property, you will prefer to take a term insurance.
Yes.
Right.
Yes.
Okay, great. That probably will help us understand a little bit better. Okay, so next question, before we talk a little bit more about mortgage, we want to understand about like usually what does your firm do? I mean, so for Kenneth, he actually started this company about 6 to 7 years ago.
Yeah.
So he was a banker before and mainly doing in the banking industry for probably about 5 to 6 years before he came out to start off his own firm, right?
Yeah.
So does your firm only do mortgage consulting? Is that your main niche?
Yes.
Right. So that's your main focus.
That's right.
Yeah. And maybe can I share a little bit like where's your office located? You know, how do audience reach out to you? What is your website and stuff like that?
Okay. So basically our office is actually located at Lavender. So it's just like 2 to 3 minutes away from the MRT. So it's convenient for clients if they require consultation on their mortgage loan. They like to find out more. They can always arrange an appointment with us to drop by our office to discuss more in depth. And for our website, it's actually www.keyquestmortgage.com.sg. So you can give us a call or through our website or Facebook to engage with us to find out more on how we actually provide a one-to-one consultation with most clients or over the phone consultation as well. Right.
So Kenneth is actually the founder of KeyQuest Mortgage, and he currently has a team of 6 consultants that is running the company with him.
That's right.
And it's a growing team as well, right? So his business is doing well. I think for the fact that Kenneth is very experienced, because when it comes to comparison of mortgage packages and then keeping up to date and giving opinions and stuff like that. I think Kenneth is very experienced in the field. He has also helped a great deal of our clients with their mortgages as well. So okay, next question that we have for you, I think importantly we want to know is that how do a buyer that is planning to buy a property, I mean, so before they even buy a property, how do somebody improve their TDSR, right? And what is probably like 1 to 3 things that a buyer would need to take note of so that when they're going to plunge in to put in the deposit, put in the option fee to buy the property, they don't get a shock that, you know, actually their TDSR are affected, and what are some of the good practices like doing an IPA and stuff like that?
Okay, so definitely first thing is to do an IPA with the banks,
right,
to know what's your loan eligibility amount.
Okay, so do you do IPA for your clients? Like,
yes, what we do, okay, so before even the client send us the documents, we actually do a verbal indicative. So what we do is over the phone, when the clients provide us, like example, their monthly salary, annual salary, age, and their commitment, we can do a ballpark figures of how much they can loan.
Right.
Usually is as close as up to 90% with what the bank is going to come back with.
Right, but that's not checking their credit rating report
Not
yet.
yet.
Okay, right.
Yeah.
Okay.
So this is the initial assessment to
Just a verbal one over the
Yes.
phone. Right. Okay.
then after which, when they have a ballpark figure, we will usually send them the bank's form for them to fill up and to do a credit bureau check. That is where the banks will actually do a detailed check whether you have any like liabilities in terms of car loan, credit cards. So a few things you might want to take note before even go to that stage is that your credit cards payment.
Right.
Actually, a lot of clients, what we see is that they are not aware that they have like 6 or 7 credit cards, because most people will actively use 1 or 2 cards, but they have another 5 lying there which they don't use.
Right.
And they might also have the issues of the bank sending them that, oh, every year your membership fee, all this.
Annual fee.
Yeah, then you have to call in the banks to waive. So actually, when you call into banks to waive for this annual fee as well as the late interest, all this actually affect your credit scoring.
Right.
So what we advise clients, actually when the banks are calling you for the annual fee, just make the payment to them first. They don't just swipe on the card, so that you don't have an issue on your credit bureau status having a B, which is a late payment or no payment on
Right.
the credit cards.
Right.
So these are small things that what we see is that when most customers receive and they don't actively use the card, they will just call in the bank and waive. Then after that, wait for the banks to reimburse back the fees or waive all the fees. But this small issue of
Affect your credit rating score.
Yes.
So what you're saying is that when you receive the bill for annual fee, is to make the payment first.
Yes.
Don't allow it to drop into a late charge.
yes,
The moment it reflects as a late charge, you drop your credit rating score.
that's right.
Right. So you advise to pay first, and then after that you can take your time to call in and ask for a waiver and stuff like that.
Yes.
Right.
Then
Okay.
you basically the banks usually will reimburse on the next month statement. So you have the additional cash, just swipe the card, so
Right.
that it actually make the whole process a lot easier, because once you have a so-called a B on your credit bureau, the banks will want to find out why is it so. Then you need
It's
to
going to
provide.
delay your application and stuff.
Yes, and most customer doesn't keep their credit card statement every month.
Right.
So what will happen is you need to call in the banks, ask for a statement, and all this takes time.
Right.
Yeah.
So just now what Kenneth mentioned is that before you even commit to a property, before you even put in the option fee, put in the down payment and stuff like that, it's very important to do an in-principle approval check, which
Yes.
is what we usually and always ask our clients to do. And IPA, for your information, is free of charge. All right?
Yes.
It's a free service provided by KeyQuest, as well as a free service provided by the banks. And because now all banks, they have to reflect the records with Credit Bureau, with MAS. Actually, once you do it with one bank, most of the time is that the few other local banks as well, they will likely approve your application. But of
That's
course, that it also subjects to your previous history with that particular bank as well.
Yes.
Right. So I think it's very important to do the free assessment. We call it the IPA, in principle approval. Right. So usually bankers or even KeyQuest, they will give you probably like nowadays it's using technology, either email or text message and stuff to say that, okay, your IPA is this amount, subject to the point of application when you buy.
Everything remains same.
You're right. So because if let's say you did an IPA, you get probably a reply saying that your max loan is at 1.5 million. But let's say in the next 1 month before you even buy the property, you went ahead to buy a new car. Right?
Yes.
And that's going to affect your rating and your TDSR again, because
That's right.
that will eat into your TDSR scoring, right? So what Kenneth has mentioned is that some of the tips is really to take good care of your credit card usage, how many cards you own, annual fee, and is there any other things regarding TDSR scoring?
Usually, if you are in the process of getting a property within the next 2-3 months,
Right.
we advise you not to have a very big spending on your credit cards, because
Right.
although you make full payment every month, but the banks still look at what is the minimum payment from your overall exposure from all the banks.
Right.
So let's say if you are spending on big ticket items, 10, 20Ks, it actually affects your minimum commitment payments to the banks,
Right.
and that will actually take it into your TDSR.
Okay, so they look at your latest spending habits.
Yes.
Right, and that is for them to assess the risk level of loaning
That's right.
you. Right. So we also have a very popular question. Usually,
Okay.
somebody will like to ask, like if let's say I'm looking to buy a property in the next 2 months,
Okay.
but I'm in the middle of a job change.
Okay.
All right, and just so happens that before I buy the property, likelihood I will be starting my new job.
Okay.
And then that also means that I would not have that couple of months of pay slip to prove my income. Probably I will have my employment contract.
Yes.
Yeah, so usually in this situation, what would be your advice? Like, can this consumer still get their loan approved? Or do they minimally need a 3-month kind of pay slip kind of stuff?
Okay.
Right.
If it's in the transition of different jobs, usually we still can base on the employment contract
Right.
to grant a loan to client.
Right.
So let's say if you know that you are going to buy a property within the next 2-3 months, and you are also looking to change a job. So first thing is to make sure that your employment contract actually sticks all the necessary detail, like how much is your monthly salary, your monthly reimbursements,
Right.
what's your annual reimbursement. So, and furnish that to the banks first.
Right.
Then we can actually get an IPA based on the employment contract.
Right.
But it depends on banks to banks per se as well. Certain banks we can just take in an employment contract. Certain banks, they will need an employment contract and you have already started working with that particular company.
Right.
And you, at times they might ask for some documents proof. Do you have a name card, staff pass,
Right.
or email address which you can send to us to verify that you have already started working.
Right.
And then that's where the banks can take in the income as well.
Right. So the banks will also assess like which company you're working for.
Yes.
Whether is it I think probably they want to assess the amount of risk level in a sense, right?
Yeah.
So but based on experience, it is doable.
Yes, it's doable.
Right. Will there be banks that are very, very stringent with this, or what is the percentage and likelihood of getting an approval if somebody is in the midst of a job change, or most of the time is approved as long as there is like a legitimate employment and they're working for a company and stuff like that. So usually it's okay.
Yeah, I would say the banks will favor more in terms of MNC company.
Right, the big firms.
Yeah,
right.
so if you are in an MNC company, usually the banks would be able to recognize.
Right.
And if you are in the SME level, they will probably want at least a month pay slip, a month salary crediting before they actually grants the loan. So
Right.
it really depends on which company you are going with.
So the
also.
size of the company matters.
Does
Okay.
matter.
So just now you mentioned salary crediting. Salary crediting is a term used by banks to
Yes.
see that the salary actually is reflected in your bank account.
That's right.
Right. So I think probably they want to see like a stability in terms of that salary crediting plus CPF and stuff like that.
Yes.
Right. How about for self-employed people? Like, we also have very popular questions like this. Like, for example, somebody is coming out to start their own company.
Okay.
As a sole proprietor, all right, and they work from a fixed pay job, but they are in the midst of buying a property.
Okay.
And they are switching now to start their own business, probably
Okay.
as a freelancer or starting a small firm. and very likely they will not be able to furnish a IRAS notice of assessment for the whole year because they're going to start their own company. So usually what is the minimum so-called like period for somebody like this in this situation to be able to get a loan, or what do you advise?
Okay, so for self-employed, it's slightly more tricky, I would say, because if let's say, example, in this start of the year, I set up a new company,
Right,
and I'm on self-employed, so I'm basically without a fixed income,
right,
from January to now.
right.
I would say most banks will not be able to grant a loan.
Okay, so what do they minimally want to see?
Minimum months, what they want is at least a 12 months record. That means your company must be registered before January 2019.
Right,
Okay, so let's say the minimum they need to look at is 1 year of track record. That means the company was set up in January 2019 to December. You have 1 full year.
right.
They will be able to take in based on your upcoming declaration on income tax.
Personal income tax.
Yes.
Right. So they minimally want to see at least a 1 year notice of assessment anyway as a sole proprietor. And take note for self-employed people, I mean, even for real estate professionals like ourselves, there is a haircut.
Yes.
There's a haircut of 30%, right? So for example, if you earn $100, they only determine that you earn $70 because there's a 30% haircut based on risk as a self-employed.
Yes.
Right. So the TDSR is slightly lower in a sense, right?
That's right.
So there are so-called, of course, there's more tricky questions. Like for example, if let's say a self-employed person coming out, but let's say they set up a small SME.
Okay.
And probably they are the main director. They have 2 staff.
Okay.
And they just started this firm probably in January, and now it's March, right?
Okay.
And the director actually pays himself or herself a salary with CPF, right? So will this pay slip so-called also be subjected to a haircut because the director owns their own company in a sense?
Okay. So if the company is only set up in January, when the banks do a more detailed check, they will be able to see when your firm started.
Who is the boss and who's the director?
Who's the director, who's the shareholder.
Right.
So certain banks will actually still take a 30% haircut, even you have a fixed salary of, example, paying 6,000 every month, you have CPF contribution, they will still take a 30% haircut. Whereas some of the banks, they were actually still based on the overall 100% income. So just now as we were talking, the salary crediting, this is something small, but most of the banks take into consideration that how you pay yourself on the salary. Is it via check, or is it cash, or is it gyro salary crediting?
Right.
So the bank is more in favor if you are putting in a gyro salary from your corporate account rather than you issue a check to yourself crediting or cash. Definitely the banks won't be able to recognize. So these are small things you probably want to think of if you are self-employed. And gyro salary crediting is acceptable for most banks, but for checks it's slightly more tricky because let me give you an example. So today, let's say if I'm self-employed,
Right.
So I can be issuing a check to myself,
Right.
because you on your bank statement you couldn't see where does the check come from. It can be from a personal check crediting in, or it can be from a company. It's very hard to determine that.
Right, but if it's from your company account,
Yes.
your corporate account going into it, it is like a more legitimate kind
That's
of
right.
arrangement. It's just like how a proper company functions.
Yes.
Right, so I understand what you mean. Okay, so I think importantly for self-employed people is that if you are in this transition, starting on your own company, it's very important to plan in advance on when you want to buy the property, being able to foresee what requirements you need in order to take out a mortgage loan and
That's
stuff
right.
like that. Of course, you can always give Kenneth a call to understand a little bit more about this requirement. So, Kenneth, we want to understand a little bit about, as the boss of your firm, right? As the director, founder of your firm, right? Usually, I mean, like last time when you started this business 6 to 7 years back, right? What made you wanted to start this business? I mean, you're working in the bank, having a very stable income, right? So why do you want to come out to be a mortgage consultant?
Okay.
Right.
So back then when I was in the banks, I actually does both residential as commercial property.
Right.
But toward a certain phase, the banks actually changed direction.
Right.
They are no longer keen in putting mortgage as their priority.
Right.
And therefore, the rates they actually offer to consumer is less competitive.
Right.
So for some of my clients who are with the banks, when they want to go back to the banks and change of interest rate package, it becomes about a lot higher compared to the rest of banks, and it's no longer competitive, and most of the bank has to choose to refinance out to another banks. So at the phase I was saying, oh, all my existing clients like exiting the bank because
You're losing your clients.
Yes,
because you only have one product.
Yes.
Right.
Yeah.
So you wanted to represent a wide range of products.
Correct. Because at a certain time of phase that the clients has to look for other options with other banks, and what I can see is more and more of my clients are exiting the banks, and I couldn't cater a solution to them. So that's what makes me want to step out from banks and continue to service them. Because some of the clients I've been working with them like 4 or 5 years. We actually established quite a good working relationship.
Right.
So come to a certain extent that if I still want to continue be able to support or work with my existing customer, one option is to actually step out of the banks.
To be independent.
Yes, and I'm no longer tied to one bank. I no longer only can sell this particular bank's interest
So you
rate.
can sell like 16 to 18 different banks products. Okay, so a very important question I think everybody want to ask is that how do you earn your income? I mean, like let's say I'm a buyer. I just bought a resale property. I can just walk straight into the bank and say that, hey, I want to take a mortgage. I can go to their website, take a look at their latest bank rates and stuff like that, and do my own comparison. So if I were to come to you, do I need to pay a fee? Will my rates be different? I think that's number one. Number one is that, do I need to pay you a fee for consultation? Number two, if I were to take a mortgage loan directly from the bank at a branch compared to coming to you, would there be a difference in my rates, or will it be the same? And what are the advantages of coming to you?
Okay.
Right.
First of all, I think which is very relevant, because sometimes when the client engages us, the first question they will ask, so Kenneth, do I need to pay you a fee to engage your service?
Right.
The answer is no.
Right.
So that means when you engage us as your mortgage broker, you do not need to pay us any single cents for our service.
Right.
So that's why more and more clients are more open up to talk to us to help them to facilitate. On the second note, which is also very common, our client will ask, oh, so now I'm going through a broker, so the bank is paying you a certain fees.
Right.
So am I going to be paying a high interest rate because of engaging you? The answer is also no.
Right.
Because nowadays, the banks are more favorable to work with brokers because they actually want us to refer business to them. So they actually give us a better interest rate compared to their shelf rates when you walk into a bank's saying that, oh, maybe bank A is giving you 1.9 shelf rate. But when you come to us, maybe we can get you, example, 1.88 or 1.87, which is lower than what you go to the banks. A very simple why we can get a better rates is that we give bulk volume of businesses to the banks.
Right.
And they will want to give us a more preference rate so that we can give them more businesses as well.
Right. So what you're saying is that if I were to come to you, firstly, I don't have to pay a fee.
That's right.
But your value to the consumer is that you can help them to compare all the banks and then to come up with 2 to 3 banks that is in terms of the best rates for this current month.
That's right.
Secondly is that you earn your income actually from a referred basis because the banks pay out a referral fee to you and your firm, and that actually does not impact the rates because that is based on your relationship working with the bank.
That's right.
Right. And sometimes because of the bulk of volume that you have, your years of relationship with them, they're able to give your clients a slightly better rate compared to them walking to the bank.
That's right.
Right. Okay. Great. So I think that's 2 very important questions because a lot of people are wondering, hey, how do you earn your income?
Yes.
How do you survive as a business and stuff? They have to pay you more. So I think if that is answered, that's great. And I think importantly also is that Kenneth mentioned that he wanted to add value by being able to represent a whole range of different loans, right? So maybe Kenneth, can you share like usually coming back to the question just now,
Okay.
how long again, like let's say I come to you Monday, usually by which day will you be able to get back to me?
Okay. Let's say if we have a conversation over the phone now.
Yeah, let's say my IPA is approved already by you previously. All right,
Okay.
you help me to check with a bank, and then say, hey, I call you on Monday. Say, hey, Kenneth, I just put down an option fee. I've gotten the OTP already.
Okay.
Can you help me to select and do some studies on the loans, right? So usually by how many working days do your guys need?
Okay, so usually once the client has a OTP, we will actually apply maybe 2 to 3 banks concurrently,
Right.
to let them get back to a formal letter offer. So I would say maybe turnaround time, maybe 3 to 4 working days. Once we have the letter offer from the different banks, that's where we will talk to the clients or sit down with the clients, run through with them, okay, for particular bank A, what are the clause they have and what's the interest rate, bank B, what's the difference, bank C, what's the difference. Then they make a decision which bank they prefer and they accept the loans from there on.
So what you're saying is that if I were to come to you, you will actually send in formal application on my behalf
Yes,
to 2 to 3 banks.
that's right.
Make sure that they approve the loan
Yeah.
based on the letter offer. But before I sign, then we'll do a comparison and then decide on one.
Yes,
Right. Okay. Understand. So that will take probably about 4 working days.
thereabout.
Okay, great. So the usual OTP period when you go ahead to buy a resale property is in the market is 14 days. Of course, the option period is subject to negotiation between yourself as a buyer and of course as and towards the seller as well. As long as both parties are happy with the option period, that can be negotiated. But the market practice is about 14 days.
Yeah.
And on the KeyQuest end, they will need probably about 4 working days to come up with the letter of offer, and that will give you sufficient time then to meet up with them, sign, and then after that head to your law firm to exercise the option, right?
That's
So the 14 days will take care of that. Okay, so the next question that we have for you is that maybe a little bit a final question about loan for buyers is that in today's market, let's say if I want to refinance,
Okay.
on the refinance, what will be some of the key things I need to take note of? Is there any blind spots or is there any setback of refinancing? What are the costs of refinancing and switching banks compared to some terms in the market? Is that you can actually reprice it with your same bank.
Yes,
right?
you can.
Compared to refinancing because you have to then pay a legal fee again. Yeah. So what are some of the plus and minuses for repricing with the same bank and refinancing with another bank?
Okay, so for refinancing, usually you need to engage a lawyer later on once you accept the letter offer.
And how much is the legal fee?
It range depending on the lawyers you are engaging. I would
Right.
say maybe about 1,008 to 2,002.
Right.
Okay, and that will also be a valuation fee when you do a refinancing.
About $500.
But also depending on
The size of the property.
size of property
Right.
and the price of the property as well determine the valuation.
Right. So it will be ranging between probably about $2,300 to $3,000 in total.
Yes.
Right. And that can it be paid out by CPF?
Okay, for legal fee part, it can be paid using your CPF, but
Right.
for valuation fee, it will be via cash.
Right.
But the good thing is, most of the time, when you do a refinancing, the new banks actually provide some rebates
Right.
or legal fee subsidies, which you can use part of this money to offset your legal as well as part of your valuation fee cost as well.
Right. So if you switch with that bank, they usually want to attract you to
Yes.
switch with their banks. Okay. Right. So what other things like, when it comes to refinancing, other than the legal fees and the valuation fee, what other things do we need to take note of?
Okay, so just now you were saying, would it be better if we approach the existing bank or to do refinancing? It all depends on what the rates the existing bank is providing.
Right.
Then usually we'll do a calculation. So let's say your existing bank A is giving you X amount of interest rate comparing to bank B, okay, which is giving you maybe slightly lesser.
Right.
So we'll do a calculation by you doing a refinancing, how much will you save? Most of the time, I would say that when you do a refinancing, depending on your loan amount, so let's say about a 1 million loan, when you do a refinancing, 1.2 actually makes quite a fair bit of difference over the next 2 years.
Right.
So your saving may be in the range of $1,000 to $10,000
Right.
in terms of interest. So even if there's no perps from the next bank, which is giving you a lower interest rate, as well as on the legal subsidy or as well as the valuation subsidy, it still probably makes sense to do a refinancing.
Right.
Because refinancing is commonly overlooked by most customers as well. And because they only focus at the point of time when they purchase, and most two years down the road, most of the client after they purchase property, they have forgotten that the lock-in is only 2 years. On the third year, the rates are higher, and a lot of clients are actually paying higher interest rate.
Right.
So some of the value services we provide to our clients is that when you engage us when you're purchasing your property, So nearing to your 2 years mark, maybe 4 or 5 months before you're out locking, we will actually give you a service call again to remind you that that your loan is going to out lock in 4 or 5 months, and we can re-look back on your interest rate package with your existing bank and the rest of banks.
Right. So what you're saying is that whether the decision is to reprice with your same bank or actually to refinance with another bank would then depend on the interest rate at that point in time. Sometimes it might make sense to reprice as well, provided the rates are really more preferential. So for repricing with the same bank, is there a service fee that the bank would charge?
Okay, usually most banks are charging within a range of $500 to $1,000 for the repricing fee.
Right. So then that's $500 to $1,000 compared to refinance. Then that will be probably about $2,000 over dollars to $3,000. But it would then depend on what would be the savings.
That's right.
In terms of the 1.23% kind of rate.
Yes.
Right. Great. So so maybe one final question. Is that what as the director of KeyQuest, what is your plan for 2020? And you what are you guys planning for in terms of for your company level, or are there any new kind of services that you are planning to embark on and stuff like that for the year ahead?
For this year, I would say it will be an even more interesting year for us, because we foresee that there is more and more clients who will actually require a mortgage broker to advise them on interest rate. So we are stepping up the ball games to go more details, to really work with the clients in terms of calculation and letting them know, okay, if you are so-called buying or refinancing, what are your options available. And we will also come with new initiative that maybe within the next few months, hopefully we can work out a video to educate clients, like
a video series.
I wouldn't say a video series. Probably something simple videos to share
educational
videos to talk more about Sibor, fix, which you go for, and depending on your risk appetite, if you do not want any to have any unforeseen jumps on interest rate, you can go for fix. But if you are slightly more risk taker, that you think that Sibor, based on what we see, is going down, but there's also a possibility that when Sibor goes down that fast, there is also a chance that later on, Sibor might be also on an upward trend. So we would probably do a bit more on the video content to share with consumer what should you be doing if you have an existing mortgage or you are going to get a mortgage loan. What are the pitfalls, like what we have discussed just now, to add in a bit more technical information for customers as well. And if they are looking to purchase, and they probably have maxed out their names like husband and wife, and they still want to purchase, can they buy under trust, or if they have kids above 21, how can we structure a mortgage loan for them as well? Right.
I think that will be very interesting content, and we'll look forward to that content. Roughly when will all this be out? Like in the next couple of months?
We foresee probably we will launch towards end of Q2 to do some education video. And we are also hopefully to have some consumer seminar this year, towards maybe Q3 of the year, to educate customers who are buying properties what things you need to look out for, not just on TDSR. If you are getting more than one properties or buying for investment, what are things on the mortgage side you need to be better prepared, so that when you go into the markets to purchase property, you are ready to give down the checks, you're ready to negotiate for a better offer. Right.
Okay, great. Yeah, I think we really have a lot of meat in today's session. I mean, we have probably asked about 5 to 6 very important key questions. And we hope that this session has been very beneficial for you to understand about what are some of the blind spots that likely you will face when it comes to buying a property, taking on a mortgage loan in Singapore, and what are key differences in terms of like the BUC rates, completed properties and stuff like that. And we are very happy, that Kenneth can come down today to our podcast studio and then to spend a precious time with us. And I think these are great information. And so thank you very much, Kenneth. Do you have any final things that you want to share with our audience?
So if you are preparing to buy a property this year, I think is a very good year. We will be more than happy to talk to you or to advise you on what's the current trend on the interest rate and what are the things you need to be more prepared so that you can get a better interest rate or a higher loan amount on your upcoming purchase.
Right.
Yeah.
Right. All right. Great. Okay. So I think that's great. So thank you again, Kenneth. Thank you for your time.
Thanks, Melvin.
Thanks for coming down to our studio, and we hope that this episode will benefit our audience and our clients, and we will stay tuned for the next couple of episodes because we are going to get, of course, a lot of different people that's related to the real estate market. We'll be talking to builders, talking to architects, as well as renovation experts in terms of what ideas they have when it comes to designing challenging layouts for homes and stuff like that. So stay tuned on our show, which is So Far So Good. And thank you for staying with us on the Property Brothers podcast studio. And we hope to see you on the next one.